Just thought I'd do a quick broadcast here. I talked about in commentary. In fact, I'll get that prepared. We'll actually go through some of the commentary and some of the things I was talking about there. Yeah, we'll get going. I'm trying to wait for some folks to join. So if you come in, let me know you're here. Let me know where you're at, if you will. Looks like someone's joined. Hey, give me a shout out. Let me know who you are, where you are, just so I start to. I'm just hanging out, waiting for some folks to come online here. I said I still haven't done a lot of marketing on the channel. Just wanted to come up and discuss some of the aspects of what's going on in the markets right now, relative to commentary and some other things. So I'm just putting some stuff on the other screen. I'll be going on. In just a minute. So I've got to do the disclaimer while I'm setting this up. I'm going to run the disclaimer. It's about a minute and a half. Got to do it what the attorneys say. So I'm going to go ahead and do that so we can get into a full discussion on everything.
All opinions expressed by the Kendall Report participants are solely their opinions and do not reflect the opinions of VPM Partners, and may have been previously disseminated by them on television, radio, internet, or another medium. You should not treat any opinion expressed on this broadcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of an opinion. Such opinions are based upon information that the Kendall Report participants and Robert Kendall consider reliable, but VPM Partners does not warrant its competence or its accuracy, or should it be relied upon such. The Kendall Report participants, VPM Partners officers, directors, employees, contractors, guests, are not under any obligation to update or correct any information on this broadcast. The Kendall Report participants are professional traders or investment advisor representatives who may be actively involved in securities herein, on behalf of themselves, their companies, and their clients. Also, the opinions expressed by the Kendall Report participants may be short-term in nature and subject to change without notice. No part of the Kendall Report participants' compensation from VPM Partners is related to a specific opinion they express. Past performance is not indicative of future results. Kendall Report participants and VPM Partners do not guarantee any specific outcome or profit. You should be aware of the real risk of loss and following any strategy or investment discussed on this broadcast. Strategies or investments discussed may fluctuate in price or value. Investors may get back less than invested. Investments or strategies mentioned in this broadcast may not be suitable for you. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as recommendations appropriate for you. You must make an independent decision regarding investments or strategies mentioned on this broadcast. Before acting on the information on this website, you should consider whether it is suitable for your particular circumstances and strongly consider seeking personalized advice. Nothing contained in the Kendall Report broadcast or VPM Partners on its website or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by any particular security, other investment product, transaction, or investment. Copyright 2017 VPM Partners and the Kendall Report, all rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic media in whole or in part is prohibited under penalty of law.
Now, for your host, Bob Kendall.
All right, so we'll go ahead and talk about some things that I talked about in commentary. And anyway, right now, Corey, it looks like it's just you and I, so we'll we'll hang out together. I've been doing some trading and actually had a pretty good day so far. But some of the things, and just looking at the bigger picture in the markets here, is that let me reduce this just a little bit. So what I was talking about in commentary last night, day before yesterday, I was actually for Tuesday's action, I was talking about having this inside session, and we had that, and that set up an incredibly bullish pattern that was going to push us up to around, go through the 10-period moving average. I'll go through this in a minute, but this is what I'm talking about here is that we bounced off of the 2602 level on Tuesday morning, and that was a huge number, and I'll show you why here in just a couple minutes. But this is pretty much hangout session. I don't know who if we'll get very many people to show up, but we shall see. But anyway, some of the numbers that came out today, the projection numbers, 2718.90 was resistance. Resistance 2, and then resistance 3 is 2738. We got up to about 30 and change. Let's go ahead over and take a look at this chart here, and you'll see what's going on. Let me go full screen. You'll see that we've went up above the 10-period moving average. Not only that, there's a gap in the chart, which is bullish in a way, but also there's a high probability that we will go back and retrace and fill this gap. And it might not be for a couple of days. But one of the things I was talking about in commentary is that we would rally up back towards the 200-day moving average. You'll see, I'll put a cursor up here. The cyan line coming down is the 21-period moving average. That is telling us that that's going to be the resistance point. Right now, let me bring that on screen. This is interesting. I'm going to have to change the background on this. I changed this so we could see stuff, but background color needs to be white now. There we go. And that causes some other issues. But for right now, you can see the 2710.83 is the 10-period moving average. We're trading 2730.47, the high 31.84. So we're pressing the highs of the day. There's going to be, I think, an effort to push this thing up even higher. We may get above that 2838 number I was talking about just a minute ago. And I'll have to look and see what's going on with some of this setup here. I forgot about some of the numbers not being transparent. But anyway, the result of what's happening here is we have this gap, and that gap is between, let me just grab that, the high of yesterday, 2685.43, and the low of today is 2705.60. With this crazy volatility that we've been seeing, we're seeing gaps in a cash chart. Typically, the way that the cash indices are calculated, what's happening is they're presenting a gap. There's so many stocks opening sharply higher that it's causing a gap in the calculation of the indicators. Normally, you can look through this chart very few times. Usually yesterday's close is today's opening range, more or less, the way that it's all calculated. You don't see that many gaps. You can go through this whole chart that's on the page right now, and you'll see there's not very many gaps. And so likely what we'll see is a retracement back to fill that gap. So we will come back at least to that. Let me bring it up here. We'll come back to at least that 2685 level, And I don't think we'll do it today, but this will be, maybe over the next couple of days. And not to forget, we're really close to the midterm elections. And I don't know how this is going to come out. If you listen to some of the polls, which haven't been very good over the years, they're saying that there's 85% probability Democrats will take back the House. Makes Nancy Pelosi, once again, the chief. And I'm not sure that's good. I think there's going to be a lot of uncertainty come out of this if that's what ends up. I was talking to somebody earlier, and I thought, it doesn't matter how this thing comes out. I think if Republicans retain control of the House, that it could trigger all the crazy people on the street into the next level where resist and disrupt go to levels we can't even imagine. And if the Dems win, then we're going to have more of a systemic issue when it comes to running the government. So we'll see how all that plays out. So what else do I want to talk about? Let's go over to the weekly graph. There is a couple events that I also talked about in commentary. And those are that regardless of what happens today, there's three key numbers all converging at the same spot. A cluster. I talk a lot about clustering. And the cluster that we have right now is the 10-month moving average. Let's just bring this on screen. Let's go through the sequence. Let's go back to the daily real quick. So that you can't, can you see it? No, you can't. I know why. Let's see here. Anyway, the 200-day moving average is 2765. The 10-month moving average, or 40-week moving average, is here at 2760.58, and then the 10-month moving average, go over to the monthly, there it is, 2761. So we have 2765, 2760, 2761. All of these are at the exact same level. And what that tells us, we're going to close under that today. That I would put probabilities well over 70% that we don't surge all the way up to 2760. It's 30 handles. Certainly possible. We've seen crazier things in the last 2 weeks as far as overall volatility goes. But this will be the first close under this level since 2015. And in 2015, we went below it, we rallied back above it, and we went down again. And the difference that we have here, although I've talked about this for the last 4 years on Market Thunder and now on the Kendall report, that you'll notice, if you look over on the left-hand side here, you'll see that the PPM3 is at 0.71. The lowest it's been during this entire sequence, we can go all the way back to 2014. I started doing these broadcasts in 2014 for 4 years now. And what we've seen is that angle of attack of the 20 or 40 period moving average has remained above 0.60. One time it did get down to 0.59, but we're back at 0.71, which tells us that there's lots of support, but it's way, way below the current environment. It's 2366 right now. So what we're looking at is the 21 period moving average is going to be the key. And I'm sorry I will fix this stuff when I get off here because I like to bring this up, but the levels that we're looking at, we got down to 2603.54. This is a weekly graph. Let me go back over to the monthly. And if we look at the 21 period moving average, 2615.02. So we spiked under it just a little bit and bounced off of it. So let's talk about theory that I've been using since 1983. And one of the rules that myself and Bill developed back in the day was that the first bounce off of the 21 typically will actually render a new high. In this case, I don't think we're going to see that, but I do believe we'll rally back at least to the 10-month moving average at 2760. And I talked about this in commentary that the possibilities of going up to 2816 to 2828 is highly likely. And that'd be a 200-point rally. And then we go back to what I was talking about a minute ago. And that was the gap on the daily graph, right? So we have this gap that come in, that'll be filled. So if we run up there, that means we'll have another 130, 140 point drop. We'll set up a right shoulder. And what this pattern is going to look like, let's see if I can draw this in. I think, matter of fact, I'm trying to remember if I did it on this page here. Let me just see if I can bring up. I did a graphic last night. This will actually be pretty good way to bring this up here. Let's see if I have it here. This should be it right here. Perfect. So this is more or less what I'm expecting this pattern to look like. You'll see here where I've got it labeled that off of the highs, we had a 5-wave sequence down. This should be actually a 5. That's an error. And then this is sequence 1. And matter of fact, I think what I'll do here, then the top of this ABC would be 2, and then we would start another 5-wave sequence down that would be at least the length of this wave 1, and possibly in a multiple. So what was the length of that wave 1 was 2940. We'll round off all the way down to 2960, so 300 points. So if we stay below 20, let's just say we stay 2800. We'll assume a 2800 high on this ABC rally. And what that will tell us is that there would be a 350 point drop from there, put us down into the low 2500s. 25 is a target right now. And there's some further targets. I'll go back to the live charts here in a minute. There's further targets that are likely to unfold over the next several months. I would even put us into first quarter of next year. And we also today, just a quick comment, we're seeing once again a very typical pattern that's been unfolding with all the algo trading, all the AI that's running into markets right now. We get into modes like this. Like earlier today, it looked like we were going to break down. We traded down to 2710. All of a sudden, 12, 14 handle run. All of a sudden, new highs again, and the machines just keep coming back. So they go in, they grind out, they take some profits, comes back in, and they run another round again. And I'll bring up my scalper page here real quick just to talk a little bit about the intraday stuff. And you'll see this is a perfect example of how this thing runs. This was not the range. Let's go back, put a 3-minute graph. We need to go further back. Go to 5-minute. That should get us there. Yeah. So here's that range. We were at low of 2708. We ran from 2708 all the way up into these numbers all the way up here. And I did do a quick scalp off the high here. I had some other things come up, but basically a couple times been scalping off of the highs and stuff like that. But what we're seeing here is that this is a classic where the machines are running everything. And you'll see, and same thing, I've talked about this over and over for the past couple of weeks. You look at liquidity, there is none. You got maybe 30, 50 contracts on a side. And I've been working hard to try to develop some techniques for these illiquid patterns. They get a little scary. I had a situation earlier today where I got into a trade and they would not let me out. And it got pretty intense there for a little bit. Had to trade out of it. But it's very dangerous in this environment because of what you see on the screen here. You look out, I've said this I don't know how many times, but you have to add up at least 4 or 5. If you look at this scale way over here on the left-hand corner, you'll see that there's roughly, just a single digit or double digit there, triple digits on the next bid and offer. And as you go out, they get a little thicker, but not a lot. But typically you'll have 400 to 600 on right here on where it's 24 by 50 or whatever. It's changing a lot. But right there, you'll have a lot more liquidity. And what happens, usually you've got to have about 400 or 500 contracts to keep the bid-ask tight. Otherwise, you've got to go out 2 or 3 bids to get there. And I did something earlier. I wish I had recorded it. It was interesting that I was I was trading off my own order book, if you will. And I had all these offers and bids laying out there. And it worked pretty good. So I'm trying to work on a technique for when we're in these kind of modes. But like I said, there was one trade I had on, and it was a little larger than I wanted to, and it was just running away. So it was a difficult place to be. And you can find yourself there quite easily when there's no liquidity. So anyway, I just wanted to talk a little bit about the liquidity. We'll go back to this chart. Like I said, I don't see us tailing off. I think they're going to keep this underlying bid. My guess is we go out at least above what I had on the daily sheets for ranges today, above 27.12. That's the R2 range. R1 is 26.99. So if we were to go out under 2,700 today, that would be a pretty negative sign. Like I said, we got 2 hours to go, and it's very likely that this thing is going to remain above the 27.12 and close somewhere near these highs. And I suspect that we will see more of this run as we come into Friday, with everybody waiting for employment numbers to come out and all that. So we'll see what kind of ranges we get. But the other thing I talked about in commentary, the VPM 3-day indicator got up to 73.4 yesterday. That means that the average 3-day range is 74 handles, which is completely ridiculous. But it is what it is, right? So what that tells us that going forward, we're going to get at least 60 to 80% of those ranges every day. So if we look at today, we've got a pretty good range here. So low, it says 2705, 2731. This is the cash, but if so, this appears, at least because of the gap higher, we've got a very narrow range. But if you look from yesterday's close at 2685, then all of a sudden the numbers get a little bigger. So even though this range is pretty darn tight, so this could start some kind of contraction of the volatility for the rest of the week. We'll see. But it's going to take 3 days to get that 3-day average down and start to see a serious contraction. So like today, we've got a whole 25 handles of range. If we go over, let me just bounce this out real quick. If we go here and look at the futures range, you'll see there's no gap in the futures chart here. And the range now here is 2682 to 2732. So now all of a sudden, we've got 50 handles of a range. So you can see this a little better on the futures. So, Corey, if you have any questions, go ahead and ask me something. I'll be glad to cover some stuff while I'm live here. See, here's another one. I'm just going back to the intraday chart here. And I'm just going to take off that liquidity meter for a minute. But the range that this is the kind of stuff you see. It starts to break down, and these machines just come in and start buying them. And you get these spikes. So we had a range of 27.25 to 27.31 in 1 minute, 5-handle range. And it's just very erratic and continuing, like I said, just kind of continuing the patterns that we've been seeing on all of this stuff. We just no liquidity, very erratic trading. And those are the kind of situations, by the way, if you were trying to scalp on the short side, and you look like you were doing real well, all of a sudden this thing just snaps 5 handles, you can get hurt pretty quick in this environment. So kind of backed off. I did some trades. I saw some stabilization, but there's really nothing out there right now. So it looks like we don't have a lot going. Like I said, I haven't been marketing this site a lot yet. We're about 3 weeks away and really starting to push getting followers and things of that sort. So one of the things that, like I said earlier, I'll just kind of recap this, is that the futures illustrate that we are having about a 50-handle range. When we go over to the cash market, I'll come over there real quick and just talk once again, review what I was talking about earlier. And we have this gap in the cash market between 2685 and the lows of 2705. My guess is that this rally is strong enough that we're going to see the markets, the S&P, move back toward a convergence point, which I'll circle here. I remember I forgot I got this tool I forgot to use the other day. I'll use it right now. So we'll go over here. You'll see in this window, you can see the cyan line coming toward the black line. The black line's the 200-day moving average. Cyan line is the 21-day moving average. And they're about to cross, and I believe this market will continue to move up toward that range. The three things that are all converging right now are the 200-day moving average, the 40-week moving average, and the 10-month moving average. It's 2765, 2760, and 2761. Those are all the numbers of that cluster of averages all at the same point. Now, the 21-period moving average on a daily is down hard, but if you look, I'm going to take off the magnifier for a second here, and if you look over on the right-hand side, you'll see that all the PPMs are upticking. The PPM 200, PPM 3, PPM 2, and 1 all have turned up. This suggests, and I was just showing a graphic a minute ago, so I'll go back over and show this graphic again. But this is what the setup is most likely going to be. There's a mislabel here. This is labeled as a 4. It's not a 4. It should be a 5. But we had 5 waves down. We should get an ABC up. We're working on the A right now. Chances are we could get to around, we printed 2731 today and change. We're likely to see at least one more day in that pattern, and then we'll get 2 to 3 days down. So possibly Friday will be a down day, and it might roll over to Monday. And then we're coming into next week with the midterm elections, which are certainly going to bring in some emotion, I suspect. And then we're going to get a bottom of a B, and I'm going to go back and show you what I'm talking about here. There was a gap on the daily graph, which will have to be filled, but it won't likely be filled for at least 2 or 3 days. So we get this little ABC pattern. The C up here just kind of drawn in randomly, but it suggests that we could go back to 2800, 2816, as high as 2828. And I'm going to go over to the daily chart, the live chart. This is just a graphical image that I made last night. And then once this sequence is complete, we should start another sequence down, and we should start to head towards 2550, 2518. There is the potential for the markets to move above 2828 level and move as high as 2878, which would put us up a lot closer to the 40 period moving average that's rolled over. But we'll see how that all plays out. I'm not sure that's what's going to happen. We'll go back over to the live graph here. And like I said, the cash has a gap, and there's an old technical theory that the gap needs to be filled. Now, in the futures, there is no gap, but on the cash, there were so many stocks opening higher that this actually caused a gap in the cash chart. The way it's calculated, you can see by looking through this, there's very few gaps up or down on this chart, and it's because the way the cash indexes are calculated. Typically, yesterday's close, if the market's moving up or down, is the open of the next session. Now, today we had a gap from 2686.84 roughly all the way up to 2705. And today's range on the cash has been pretty narrow, actually. We're looking at 25 handles, which is about half of the normal range. So we could see an expansion. Whether we see it expand to the upside or not, that's yet to be seen. But as I was talking about a little bit ago, we are seeing the machines at doing their job. And I was just go back over here to the WaveTech scalper here, and you can see some of these spikies bars here where we're having 400 and 500 point ranges in one bar. So that's just going to be the pattern. What's been going on as far as the machines go is actually, I'm trying to get this meter back up. I'm not sure where it went on this page. Bear with me 1 second. Anyway, I'll have to get it up when I'm offline. But anyway, this pattern, we're just grinding it out, and there's no liquidity, but there's buying coming in the futures that are, you can see it, we're just ticking up toward the highs. Here we go. We were literally 200 points off the highs in 5 trades. We're now 1 tick off the highs. There's the highs, new highs right there. So this is the way this thing's been trading. And then they back off about 150 points. They consolidate, and then you'll see another surge. Now watch this. Let's just take a watch of this. You look at the far left-hand side, you'll see what I'm talking about here. But they'll back off for a minute and a half, and then there's another surge. You notice that right now there's very few contracts on the closest bid ask. So here we are, we're now 150, 175 off the low, and then typically what will happen on these new highs is there'll be another run at this thing. But this has been happening over and over again, so this thing is not going to decline, I don't suspect. I talked about this a little bit earlier. I've been on this broadcast. I'm not sure how long I've been up now, maybe 35, 40 minutes. And one of the things, just going back to this other page here, is that how today ends is going to be really important. If we were to close back below 2,700, which probabilities right now are probably less than 20% that that's going to happen. In fact, it looks like, I'm just going to pop back over to this other screen fairly quick. Yeah, see, this is a pattern. We're just about printing new highs. Here they go again. So this is the pattern they keep doing. You get a bar here, and then you rally back. So let me go back to this other page, back and forth here. But this is this A wave I was showing you just a minute ago on the graphic. Should complete itself. There should probably be 2 days in it. So tomorrow, Thursday, and then possibly coming into Friday, we would see even a reversal high, or maybe it doesn't make a new high from whatever tomorrow's high is. And it's possible that today's high is it, but we'll see. I mean, we're up 50 handles right now from yesterday's close. We're up 1.88%. And, we're seeing a lot of upward volatility, we'll call it. And this was easy to call. If you're a subscriber and you read my commentary from yesterday, and I actually going back to Monday, what I said is it was most likely we would have on Tuesday an inside session, which we did, and that was more bullish than if we would have made a new high in the pattern. And that new high would have actually negated some of the power that we're seeing right now. So we got the inside day, then we get a gap higher, and we see this thing move up to these higher ends of the ranges. So yeah, I'm just trying to look at your comments here real quick, Corey. Okay, yeah, that makes sense. I don't look at a lot of that stuff. As far as the comment was that the CFTC futures report showing a lot of shorts in a Russell 2K. That's fine. I've never figured out how to trade off of that information. It's pretty old when it comes out, but it's certainly, I talked about on a broadcast the other day, maybe even on Monday's Kendall report, that I really don't believe in overbought and oversold. I do see the markets getting overextended, and some might call that overbought or oversold. But we certainly, the patterns that we're seeing across the board, like I said, when I was doing commentary for Tuesday, it was incredibly easy to figure out at least the next two sessions, which was into today, that we would move toward 27.12, 27.30, right where we're trading right now. And, this thing keeps, I suspect, I don't have, let's see here, where are we? High 27.33.89. So while we were talking, that futures pattern that I was talking about just unfolded again, where it trades up, makes a new high by about 100, 150 points, backs off 200, then surges back up. And this is all algo trading. I'm telling you, it's not me and other folks clicking on the mouse doing this. It's definitely HFT, high frequency traders and other types that are driving this market. And these markets are relentless. They won't give up. And you think, sitting here as an individual trader, that I'm looking at these markets. I mean, it's hard. I have about maybe 2 hours, 3 hours that I can focus on what it takes to really make money in scalping and trading intraday. It takes an awful lot of energy. And so you have to have these algos doing this stuff, because it's hard to actually, maintain the focus and all that. I'm 66 years old, but even 10, 15 years ago, it was hard. And even going back to the days when I was in the trading pit, that's very tiring days, especially when you're standing up and trading, and even if you're on the floor trading off a screen like we used to a lot, it was incredibly exhausting. I also discussed something on Monday's Kendall report. You can go back and watch the broadcast if you didn't see it. But I actually talked about some of the larger patterns that are unfolding here. And I still believe, like I said on this, I'll bring up this graphic, and I'll probably go off air here pretty soon, but this graphic here really describes what I'm expecting to see on the overall patterns on the market. So we're going to see probably a 5 to 8 day recovery rally, followed by a retracement. Will at least minimum fill the gap at 2685. So if we get up to 2760, back to the moving average cluster I discussed earlier, between 2760, 2765, then we see a retracement will at least get back to 2685, and very possibly sometime in November, we will, obviously, since this is the last day of October, but sometime we should retest that 2602 lows that we printed on Tuesday. Actually, on Monday, wasn't it, that it printed? But the point is that we should see that retested. And the targets, as you can see here on this graphic, is that we would see I'll just come on screen because I'm going to finish here. But what we're seeing here is that the pattern should unfold. We get a three wave. What we're seeing right now is the A wave. We'll see a retracement, probably fill that 2685 gap that I was talking about on the cash. We see one more surge up, and whether we can go to 2760 on that surge, we should see at least 2 bars. Typically what we'll get is a 3-2-5 pattern, and if we get that pattern, then that means we'd have 3 sessions up, which would take us all the way into Friday. And we should stay, if that first move gets all the way to 2760, then probably early next week we start a pullback. As I've talked about before, even though earnings are coming out better, I think I saw a report about 22% better, they have not been good for the markets. There's been a lot of negative inflection, and by the time we get to Tuesday, by the way, we'll be at the midterms, and that's going to bring in some volatility. That may be the retracement rally, and then we'll fill the gap, and then we'll get one more rally, and we'll go even to 2800, 2816. Right now I have an extreme at 2828, and above that there is a possibility of going to 2870s, and that will set up the next pattern. What that means is on this chart here, the C wave then becomes elongated. It goes a little higher than what I'm showing here, and then we start this decline. And right now, and I'll just cover everything, so I'll have this a couple times on this broadcast, is once we finish that C wave, then the measurement will be 330 points from the top of the C down to the next bottom, which should be another 5-wave sequence. And that's the minimum. We are likely to get a ratio. So we should see the market move to 2550 to 2518. And the next number, it's no man's land under 25, roughly about 2525. That was the lows I think we printed in February of this year. And I suspect that if we get below that, there's no support all the way down to around 2385. And actually there's a number 2325 is the target that I have right now for the sequence. And all of this that we just talked about is most likely end of year, may even carry us into January. So this is going to be an evolution. I talked about this early as well. Today, there's a 60% probability we'll close under 2665. As I talked about, 2665, 2660, and 2661 are the 200-day moving average, the 40-week moving average, and the 10-month moving average. We're getting closes on all of those, below all of those, which is significant. And what you'll see here is even though, like right now, the PPM1 on the daily is minus 0.28, minus 0.32 on PPM2, and PPM3 is a minus 13. And one thing about the minus 28, is that's there's still a probability that we'll close back below this 10-period moving average. If we did that from the position now, we're going to close on the low end of the day. So that means tomorrow and Friday we fill that gap. So I'm actually going to be out of town tomorrow. So all I'll have is your subscriber to our services, then you'll have the commentary to follow up on. And then I'll be back around Friday, and I'll probably come up after the employment comes out and whatever else that we have to look at that time. So anyway, thanks for watching. I appreciate it. These are kind of just hangouts. Always looking for... no, Corey, I didn't record the trades from earlier, unfortunately. Right now, I've just got the live stream running. So, but I am, like I told you before, I am going to be putting a full course together on the scalper course. But anyway, we're still hanging in there on this market. And like I said, Friday I'll probably be around to do some stuff. I have to be out of town tomorrow, but I will be back. So anyway, thanks for watching, and we'll talk to you soon.